Let me ask about your take on the earnings. I mean, give us an overview on how Deutsche Bank is doing right now.
Overall, these are solid results. And to be honest, if I look at the headwinds we had in the second quarter, if I look at the material transformation which we did in all parts of the banks in the second quarter, I would even say these are very solid results. Revenues came in line with market expectations, in some business even above consensus. I think the pre-tax profit of 700 million for the first half year, 1.1 billion, is a solid number. But most importantly, Matt, we have executed actually on all the targets which we have set ourselves. On the cost side, we went through a material headcount reduction already in Q2. We have the lowest headcount in the bank since May 2010, since the acquisition of Postbank. And most importantly, we have further reduced our leverage, and that results now in a capital ratio of 13.7%, which is a real solid number, which speaks for the strength of the bank and gives us now even the possibility to redeploy capital and grow in the second half. So actually, I feel all right. I think it's very solid numbers.
Can you, one of the analysts that covers you, Andrew Coombs at Citi, has said the problem is the revenue attrition has been moving at a faster rate than cost reduction. Can you use this extra capital, this extra leverage, to implement a cost-cutting strategy that slows that or turns that around?
It's exactly that. I think with the capital we now have, it is our clear strategy to redeploy some of that in order to further grow in the core businesses where we want to grow in the second half. And that already started now. And it is clear that in a time like in the second quarter, where you reshape your business, where you on purpose reduce certain things, that you also lose the revenues. But for that, and therefore I said at the beginning, we are above market consensus. I think we had a very stable and a very solid development. And now with the capital in the back and in hand, I think we can further grow.
Can you give us some specific plans to reduce costs? I mean, for example, you talk about the headcount reduction. You want to get to 93,000 by the end of the year. You want to get to 90,000 by the end of 2019. How are you going to achieve that? What are you doing to cut these costs to reduce this headcount?
Well, first of all, it's all about having a fundamental plan in hand and have the discipline and the execution to execute on that one on a weekly, on a daily, and on a monthly basis. And that's what we started really since April. We had a clear plan for the bank where we have to reduce, where we have to adjust our headcount, and I think we have been very disciplined on this side. But it's not only about headcount. Yes, we will make our way to come in below 93,000 at the end of this year and well below 90,000 at the end of next year. But there is more than that. In all other cost categories we have in this bank, we actually materially reduced the cost versus the second quarter 2017. So we are not only working on the headcount number and on the workforce number, we are also working with far more discipline on all other cost measures. Therefore, we have tactical programs, we have strategic programs, and I see the progress which we have done in Q2.
Let's talk about the individual businesses and start with CIB. Maybe the most important core business. You've talked about trading there. FICC trading dropped 17%, and that compares with growth at UBS and the other U.S. peers. Why have you? Is it due to headcount reduction? Is it due to cost reduction that you've seen this drop?
First of all, I'm glad that you're saying the most important business because it's, for me, also very important. The corporate investment bank is a key ingredient and is a key DNA of Deutsche Bank, and that will remain the case. In the FICC business, which is a core business within the corporate investment bank, we had a very good second quarter 2017, in particular in the credit trading. Secondly, yes, we went through a transformation in the second quarter, so you see the one or the other adjustments we have done, and therefore we did it in one quarter. Now we build up the capital, we bring it back to the business, and with the processes we have, with the client franchise we have, I'm very confident that we will see actually growing revenues in that business going forward.
You say in the press release that you remain confident about maintaining your position as the fourth largest house globally in FICC trading by revenues. What gives you that confidence?
The client feedback we get. I mean, since I have been in this position, I have seen more than 150 clients globally honestly, they want to have an alternative to the US banks. They see us as the European bank offering the full range of corporate investment banking services. This client feedback gives me the confidence. Secondly, the expertise and the products we have. And then also, if you look into the underlying business, into the developments which I've seen over the last months, plus the capital position we have, I'm confident that we can grow.
What about the private commercial bank? And I assume this one is close to your heart because of your experience in retail banking. Why do we see revenues here dropping 10%, even with Sal Oppenheim included?
If you take out the one-offs from last year compared to this one, actually we have a flat development. And that in an interest rate environment which we have here in Europe, again, in an environment where in the second quarter we completed the largest merger of banks in Germany since the European Central Bank is in place in 2014. That is actually a good result. We have shown resiliency also there, despite the focus on the merger which we have done there. And hence, I think we are growing in the lending business. We are growing the assets under management. And that speaks for that, which is my ultimate goal. A business and a bank with more stable revenues, which is sustainable, profitable, and therefore we need long-term growth from the private and commercial bank, and that direction I can see with growing lending and with growing assets under management.
Let's talk about the rates environment. We seem to have a pretty clear path now from Mario Draghi and from the ECB. How confident are you that we can see rates increase, and how important is this to your business?
You know, this management in particular focus now on the next 18 months. We have set ourselves clear goals for the next 18 months for 2018 and for 2019. We are saying that we want to have a return on equity of 4% at the end of 2019, and that does not depend on a rates increase. Hence, we have to plan that what we can actually really influence. That is cost, that is capital, and that's what we are doing. Of course, it would be nice to have a rates increase. However, that is not in my hands, and hence this is not an underlying driver for the next 18 months. And to be honest, it's always hard to predict rates increases, and therefore this is not part of the plan over the next 18 months.
But do you expect it? I mean, you came into this position almost at a perfect time if you look at it from a rates perspective, because we seem to have troughed, and now we're getting ready to climb in the next, say, 13, 14 months.
I do expect a rate increase over time. Whether that happened already in 2019 or later, honestly, it's hard to say for me. I think it's necessary to have that in Europe, but it's very hard to really predict the timing, and hence we have done a plan for the next 18 months, which is not depending on that.
All right, so speaking about difficult to predict, let's talk a little bit about Brexit. What does the Deutsche Bank in the UK look like in 2019, 2020, 2021? What's your vision for a post-Brexit Deutsche Bank?
First of all, I think that the UK will always be a key place in the financial industry. London has the infrastructure which almost no other location in this world has, and therefore I think it is wrong to predict that there is no major financial location in London that will remain the place. And that is very important also for us. So Deutsche Bank will remain obviously in London. We will have a material location. But looking at the events and looking at the developments, there will be certain services, certain tasks, obviously, which we will move over to Frankfurt. But that also depends on the final negotiations. And hence we are observing closely, and then we will take our action.
But do you have a plan in place? There's been a lot more talk recently about the possibility of a no-deal Brexit. So do you have a plan in place for that scenario?
Yes, we have a plan in place for the scenario, and we are working diligently on this one. Of course, as I said, we need to be very, very close to this one, but I think we have all the key issues in hand in order to be prepared for either scenario.
Do you expect, or do you have a headcount number in mind for the UK, for Deutsche Bank in the UK?
No, and that would be, honestly, it would be wrong to issue now any headcount numbers. But I think one thing is clear, and that is that Deutsche Bank will always have a material location in the UK and in London. It will remain a very important place to do banking, and therefore Deutsche Bank wants to be in the UK and also in London.
I can assume also that you'll always have a material place location in the U.S., right? If you want to remain fourth in sales and trading globally, is that imperative that you have a U.S. presence?
Absolutely. And honestly, that is the client feedback we get. It's not only that the clients around the world want to have one bank which can offer the corporate investment banking side and globally and with the full range side of the American banks. It is also vital for a German bank to offer the full services for our German and European clients in the US. Secondly, we have businesses in the US where we are market leading. When I look what kind of market share we grabbed in the leverage and structured business, which is predominantly done out of the US in the second quarter, this is a fantastic development. We want to do this. We are in the commercial real estate business in the US. We are very successful. That is a business which is steered out of the US. We will remain in that business. So Deutsche Bank is a global bank, will remain that network. If you want to be internationally successful, you need to have a meaningful location in the US, and hence we stay there.
How has the business there been affected? I think of two major issues out of the U.S. One, the tax reform moves that President Trump has put through, and the other is kind of the trade concerns that have developed. Have those policies, have President Trump's policies been a headwind or a tailwind for you?
I think long term, to be very honest, on the tax reform, it hit us in 2017. That was the reason why, from a pre-tax profit, we actually turned into a net loss. But over time, that will be also positive for us, lower tax rates, and hence it does not impact our day-to-day business. And also on the trade side, that is actually something which in particular hits the underlying economy. I'm still of the expectation that we will find an agreement and that the politicians will find agreement on the tariff side, which is mutually beneficial for the economy. That would be good for Deutsche Bank, but so far that did not impact at all our business.
Well, Juncker's headed to Washington, I think, right now. We're hearing concerns from German car makers and other people in German industry about the possibility of tariffs. You lend more money to German businesses than anybody else. What are you hearing about the possibility of tariffs?
Of course, everybody wishes that these tariff increases do not come, because I'm absolutely convinced that overall it is negative for the global economy. But on the other hand, I think in particular the German industries, the German corporates have shown not only resilience, but they have shown the flexibility and the adjustment capability in the past to react to various global trends. And they actually came out not only in a resilient, but even in a more profitable way. So therefore, I do believe that even if this happens, that there is the capacity to adjust, and hence I think we will also, as Deutsche Bank, we will be in very good business with our German corporates going forward.
One of the, I mean, in a sense, a silver lining that's come from these trade discussions is that Xi in China has become a lot more liberal, at least in what he's saying. How is your business going, your relationship with China, your business with China? I mean, is that improving as a result?
First of all, the overall business we are doing in Asia Pacific is a very important business to Deutsche Bank. It makes a material part of our revenues, and we are very glad that we are, as I said, not only a bank which is in Europe, but in the US, but with strong parameters also in Asia. In that, China plays a key role. We want to invest in that business. We want to invest actually across the bank, not only in the corporate investment bank there, but also in the wealth management business. So we are glad actually with the development which we see there from an economic point of view. And I think Deutsche Bank will be a strong player in China.
On that note, let me finish on a question that should allow you to be, optimistic. You've just come into this job, but you're a lifer at Deutsche Bank. You've been here since you started
1989
as an intern.
Right.
What is your best case scenario when you look at your plans, at your vision for what Deutsche Bank is going to be in 3, 4, 5 years?
The best case scenario is obviously that we are even ahead of our ambitious plans. But what I'm striving for is bringing back to this bank a mentality that we execute on our targets, that we bring that what we promise our shareholders, what we promise the market, and therefore we actually had a quite good start in Q2, but this is only one quarter. We have now a way ahead of us where we want to turn Deutsche Bank into a more balanced bank with sustainable earnings, We need to reduce the volatility which we have seen in the past. I think we have all the ingredients from a strong capital base, and if we now can turn this bank into a sustainable earnings, sustainable revenue increase, honestly, Deutsche Bank will be the leading European investment bank, the leading European universal bank with a global network, and I think that will also turn that the perception about Deutsche Bank, the reputation will be far stronger, which by itself will then result in increased revenues.